with Hurricane Ian, the property insurance has been a topic for a lot of people all over the state of Florida. People have been, really worried about it. So what are the three biggest mistakes real estate agents make when it comes to property insurance?
Welcome to the Jennifer J. Hammond Podcast. Jennifer is a licensed realtor, educator, speaker, and best-selling author. Jennifer's goal is to help you find your yay in every day.
Hello. This is Jennifer J. Hammond. I'm so excited. We're going to talk about the three biggest mistakes you can make when you are a real estate agent and you're advising your clients about property insurance. So we have an expert here, Rich Ficca with Florida Coastal Insurance Agency. And of course, we're going to talk about Florida. So welcome to the show, Rich.
Hey, Jennifer, thank you so much for having me today.
I'm so excited.
Really excited to be here.
I'm so excited because, with Hurricane Ian, the property insurance has been a topic for a lot of people all over the state of Florida. People have been, really worried about it. So what are the three biggest mistakes real estate agents make when it comes to property insurance?
So I have been selling insurance for 26 years now, and I will share with you, there's nothing worse in the world than when a seller wants to sell, a buyer wants to buy, and a deal falls apart, which means all that hard work goes down the drain. A lot of times those things could be solved if the real estate agent just kind of knew some of the pitfalls in the way that can make that happen. Three, I could pick 10 out of a hat. This is Florida right now. We're probably the worst state in the country as far as insurance, but we're still one of the best states for weather, so it makes it worth it. So what I would start with first is an agent needs to understand that we have an extremely limited marketplace in Florida right now. Carriers are less receptive to challenges than they've ever been before. And because of that, there's two documents that a real estate agent wants to be just intimately knowledgeable with, and that is a 4-point inspection and a wind mitigation form. A 4-point inspection is going to be required by any home older than 30 years old in Florida. And because, especially like in Pinellas County, I write statewide here in Florida, but in Pinellas County, where I'm based out of, the majority of our homes were built, and I can't even believe I'm saying this, 30 years ago is 1992, right? I can't fathom that I'm saying it, but most of our homes here in Pinellas County were built prior to 1992. The same goes in Hillsborough County, which is Tampa. And so when you're dealing with these older homes, if it's more than 30 years old, it's going to require a 4-point inspection. And what that 4-point says is what condition is the roof in, what condition is the electrical in, what condition is the plumbing in, and what condition is the HVAC or the heating and air conditioning system in. And there are rules to that, what passes and doesn't pass. But it's super important that an agent in Florida have a working knowledge of this form so they can know what to do. Now, I will share with you, I have the privilege of representing realtors on the buyer side, and I have the privilege of working with realtors on the seller side. One of the things that we do for most of our realtor relationships is we use that form to negotiate one way or the other. Let me give you may I give you an example?
Yes, definitely. Examples are the best way to learn.
All right. So Jen, you have this amazing 4-bedroom, 3-bath, 1978 home, right? It has a beautiful view. It's gorgeous. It's 84 degrees year round. You want it, right? And you're going to sell it. And the buyer comes in and the buyer finds out that the roof is in bad shape. The buyer's realtor is going to immediately say the following words to you. They're going to say, our client can't get insurance, so you're going to go ahead and have to fix that roof. Now, again, we started this conversation with seller wants to sell, buyer wants to buy. But what I didn't say is seller wants to put 15, 20,000 into a new roof, and buyer's not going to put 15 or 20 grand into the roof. And so now buyer can't get financed because we got a bad roof and we got a bad situation. The buyer's realtor is going to use that statement to try to beat you up as the seller's realtor. So what we do is for many of our realtors who act on the seller side, we act as the voice of reason. There are always ways to get that home covered. And they might not be the best. It might not be the perfect, but it's a way to get us through closing and a way to get that transaction done so that the buyer can now go ahead and get that roof taken care of. And again, this is one arbitrary example. Could be an electrical box, could be a plumbing issue, could be a lot of things. We're just using roof for our conversation. And so with that, what happens is when that buyer's realtor says that, when the seller's realtor says to the buyer, no, I can do that, they say, no, you really can't, and it doesn't go anywhere. My seller's realtors get us involved. We actually get on three-way calls with them or clients or however we need to and say, we actually have options. And it completely kills that conversation and allows that deal to get done. I had a sinkhole that this happened to just last month, and the buyer's realtor won a $45,000 concession for the fact that they couldn't get insurance. And so we insured it. And they gave them a concession based on the difference between traditional insurance versus the unique policy we had to go find for this person. It was a $2,000 seller's concession instead of a $45,000 seller concession. So that's an example on the seller side, how we help. Now, dirty secret, if I'm representing the buyer's realtor, they will use us as a resource as we teach them what on this is going to be a challenge. Because even if you can get insurance, it doesn't mean it's going to be the same price that a traditional admitted good standard company would have been. And so a lot of times what I teach my buyer's realtors to do is to use that as either an opportunity to demand, to have something replaced, fixed, etc., or at minimum to get a concession for the difference in the insurance value. Insurance cost in Florida has skyrocketed over the last 2 years, and it is such a larger percentage of the transaction than it ever was. So concessions for the difference in pricing between a policy that's covering a unique challenge versus standard policy could be $5,000-$10,000 these days. And as a buyer's realtor, you're going to want to be aware of that. So that's one of the first things I think. And again, this becomes an extremely detailed conversation based on what's the challenge of a home. But to me, that would be the first thing I would tell your realtors on both sides of the equation. They really got to know how to look at that wind mitigation so they can use it as a tool.
And I think that you just said that there's so, and I know we could go into this for hours, but just quickly, if you would also expand a little bit on that as far as how that changes if it's a waterfront property or if it's a townhouse and I mean, I hate to say, but there's lots and lots of RVs and mobile homes. So how does that change depending on the actual type of property for Florida?
So again, there's two things. So my second point to you is going to be about flood insurance. So we're going to dive into flood insurance here in a second anyway. But obviously, if I'm coastal, and we're going to define coastal as 2 miles or less from the water typically, and I will actually give your listeners a really cool tidbit. We're actually more afraid here in Florida of tidal surge than we are wind. Tidal surge does a ton more damage. So when you're trying to figure out if a home is in a nervous area for an out-of-state buyer, more importantly than the distance to coast, go check the evacuation zones. So evacuation zones really have nothing to do with wind. They have all to do with tidal surge. And if somebody's afraid they're going to buy a home in an area that may be a little bit more risky for hurricane exposure, that tidal surge zone will kind of give that away. So I try to teach realtors all the time, tidal surge zones align very quickly with the risk tolerance of your buyer when thinking about a Florida property. But to your question, it's just going to exacerbate the problem. A roof challenge on a coastal home because we're afraid of the wind damage is going to be more. So the closer you get to that water, unfortunately, the more expensive insurance is going to get and the more the cost is going to go up. So the more that this matters. When it comes to, if I've got a home that's 5 miles or 15 miles, really that's not going to change very much. What's really going to matter is as we deep dive into those coastal areas within 5 miles, and then we get hypersensitive within 2 miles, and we get hypersensitive when we're within 1,000 feet of the water. So that's when our scrutiny level from an insurance side really jumps up. And how's the home built? What's its condition? How's its structure able to handle? So I hope that helps.
And that helps a whole lot. And just one other quick one. So as we look at Hurricane Ian, who just came through this year in 2022, one thing is a lot of people said that if they knew what lessons we learned from this one for Fort Myers, what lesson do you say that we have learned from this most recent hurricane?
So a good insurance agent is not in the insurance sales business. They're in the risk, right? They're in the risk mitigation business. And yes. Ian, and sadly enough, Hurricane Katrina taught us this lesson, but we just didn't learn it. And Hurricane Charlie taught us this lesson, and we just didn't learn it. And now Hurricane Ian, and it seems like people are just a little bit more cognizant of it. And the lesson I'm referring to is that we don't really know where a hurricane's going to go until it's close. And I would say to you that from a risk mitigation standpoint, and again, I don't want to waste time with your listeners, but there's 4 ways to handle risk, right? And the easiest way to never get caught in a hurricane is move to Kansas. That does not sound exciting to me. So I'm not going to implement that into my life, right? So the next 3 ways I can do it is 1, I can risk right? I can risk reduce. How do I risk reduce? A lot of those folks down in Port Charlotte and Punta Gorda should have put their shutters on 2 days earlier. By the time they knew to put their shutters on, winds were 30 miles an hour. And God bless them, they were 65 years old trying to pick up big metal panels, and it just didn't happen. And you can't count on your handyman being available when everyone else needs that same handyman. And so putting those things on sooner than later. Pulling in, as silly as it sounds, pulling in objects under 5 pounds, throwing your PVC pool furniture into the pool, if you have really nice West Elm stuff, don't do that. Put it inside, right? But don't throw it in the pool to ruin it. I had a client who did that, and they pulled it out and said, "Is this covered?" I'm like, "No, you ruined all this beautiful stuff." I said, "You should have called me before." But again, the point being, risk reduction is a big thing. And then on the risk transfer side, and again, risk avoidance is easy, but it doesn't really make sense. We can risk reduce, right? We can risk retain, which is roll the dice. And I think what Ian taught us was risk retain is not a great idea. It sounds so good. Even as realtors, as professionals, so many realtors I find we get lazy as to the potential dangers of Florida. And so to make a DTI work, we say, oh, take that 5% wind deductible on this $500,000 home instead of 2%. And I would challenge, I don't know that you did your client. If they can afford the $500,000 house, they can afford the $500 extra for that 2% deductible. That in this, scenario saves them 30 grand of deductible. I mean, that's the cost of the roof. And I think what we found is, unfortunately, risk retention, which is what high deductibles are, a lot of people down there are suffering right now from it. So my point would be risk retention is not so good. Make sure you're implementing either risk reduction, do the things. If you're going to take that 5% wind deductible, you've got to be committed to getting those shutters on, getting all that stuff done, or pay more for some better risk transfer. You want to be lazy? Cool. Pay a little more money so that you got the coverage when you need it. So that's what I think Ian taught us. I just feel bad because I think all the other storms should have taught us that too. We haven't learned it yet.
Well, one other principle that you said that I think is so important, and you just went past it really fast, but as a real estate agent, we also need to know, and I think we think about this a lot when we talk about lenders, mortgage lenders, is that we're not looking for a transactional process. We're actually looking for, I want to say, a transformational kind of, you want to have a relationship with your insurance agent. And you just said it, like with your client who threw the wrong furniture into their pool, is you want to be able to have a relationship where you can pick up the phone and call and ask those questions when something happens so that you can be informed. It's not just calling a 1-800 number to get your insurance. And I think that is also from my viewpoint, one of the biggest mistakes many real estate agents make. Oh, just call the same company that, you got your auto insurance or your, and if you don't have a relationship with them, it's just a 1-800 number you got from online, and you don't have a relationship where you can call them and ask questions. I don't know, but what your number 3 was for the biggest mistakes. But what do you think about relationships?
Oh, I think that's I think we just moved that up, and I will elaborate that. I will tell you that we have this amazing opportunity, particularly here in Florida right now, where everyone from the country is moving in. Our cities are growing to some of the largest in the country very quickly. That you can choose to be transactional, but what an opportunity to be relationship driven. And as a real estate agent, much like an insurance agent, everyone seems to get caught up in the cost of the transaction and thinks that's what drives it. But I believe that educating our clients and being our value prop being that we're going to give them far more knowledge than the average is really what can set us apart and make us successful and really capture a lot of that opportunity that's coming to Florida right now. I have been an educator of insurance education. I actually teach pre-licensing continuing education for over 2 decades now. And
Wow.
unfortunately, whether my clients like it or hate it, they're going to get educated on every aspect of what their coverage is, why they need to buy this one, why this one has value. And I think the more real estate agents understand that insurance is a treacherous place here in Florida and they can speak to those things, their value is going to increase for their clients as well. So, yeah, we'll move that to 2. And since it would have been 3, and now we'll go ahead and jump in. The other one I would bring up in this particular thing, because again, we are focused on Florida today, is as a real estate agent, you have to understand flood insurance.
Mm.
And flood insurance, a lot of people don't even know this. So as of the last 12 months, flood insurance has completely changed in Florida. Elevation certificates, the need for them, not having them, whether you can grandfather or not grandfather, all of these things have changed. And simply put, Florida, for those of us based in Florida, and actually the numbers say Florida has been unfairly punished for the national expense of flood over the last decade. If you actually do the math on the losses, now, by the way, the numbers that I'm referring to were pre-Hurricane Ian. Hurricane
Mm.
Ian is going to move that back in line a little, unfortunately. But the losses in states like New Jersey and New York for like a Sandy back a couple of years ago were massive. You can't build underground in Florida. You'd be in the water. If you dig too deep, you get a pool here. That's how it works.
Or a
Versus states up
sinkhole.
north, or seeing right, versus states up north where they have entire infrastructure built sub ground level. So the amount of damage and destruction flood did. So Florida, because it seems like we should be the biggest perpetrator of flood losses, gets charged a ton of money. And so again, if I'm a realtor, why do I care? I care because if somebody wants to buy a home and they find out a new flood insurance policy is going to be $25,000 a year, that's a real number we're seeing all the time right now. That's a real number for flood. Then that's going to affect whether my client, they may love the home, but when we're talking DTI and we're talking ability to get mortgage and we're talking just desire to endure cost, when you get to $1,000 or $2,000 a month, that's going to change some opinions. So if I was a realtor, I would make real sure I understood flood maps. And you can go pull them up for free these days. They're digital. You can see. And simply put, the comment I always love is, first off, Florida is a peninsula, and the Tampa Bay area is a peninsula on a peninsula. And Pinellas County, where you and I both are right now, is actually a peninsula on a peninsula on a peninsula. And so the idea that you're not in a flood zone is actually an incorrect statement. All of Florida is a flood zone unless you live at Hogwarts. The whole country's flood zone. It really just means, are you in a mandatory flood zone? So if I was an agent, I start to understand the difference between a mandatory flood zone, which means your mortgage provider's gonna demand that they carry flood insurance. And by the way, let's take 10 seconds for your listeners to talk about what that means. A mandatory flood zone means we expect, without question, the water level sometime in the next 100 years will be higher than the height of the dirt. And so that means we know it's going to flood. I didn't say we know it's going to flood tomorrow. I didn't say we know it's going to flood next week, but we know within a 100-year period we expect it to flood. And so for your listeners as agents, real estate agents, to understand that if I buy in an area that the base flood elevation is 12 foot, that means we expect the water will go to 12 foot in the next 100 years, and the home's bottom floor is at 6 foot. This place is gonna be 6 foot underwater, and it may not get 6 foot underwater tomorrow, but it wouldn't be surprising if it was 1 foot underwater sometime in the near future. And because of that, my industry is going to rate that higher. So there's 2 points. One, are you dealing with a client who's risk adverse? Even though they can buy the insurance and can afford it, are they going to want to deal with that? Right. So if I was a real estate agent, I would be having this conversation. Jennifer, you come to me, you're coming down from Washington, D.C. You're like, I want the sun, I want the fun. If I was their agent, I'd be saying, cool. How afraid of rebuilding are you? Because I have this amazing home slab on grade out in Tierra Verde, but it's probably going to flood. Are you okay with that? Or should we be looking for homes that are built where the base level of the home is 18 foot high? A lot of times the homes you see here in Florida, when you see steps going up the front, that's because that's a garage level on the bottom. There's no living area there.
Yeah.
Worst thing we got to do is replace the exterior walls. The home doesn't get hurt. And again, these are powerful conversations for realtors to have so that one, you figure out your client's risk tolerance. Two, not only can they, and then two, can they afford what that risk is going to bring them? And so that you don't waste 30 different houses that you look at, 18 of which they can't afford the flood insurance. Save yourself time, energy, money, and do a better job for your client. So that'd be the third one I would tell you.
And I think that that's so critical, and not to belabor the point of how horrible this last hurricane was, but I think you probably know the numbers. How high did some of that flood surge go? I mean, flooding was not just a foot or two, right?
So I would remind you of a couple of things. So this is going to get crazy. If you have a 12-foot surge, that means the water's 12 foot higher. But I'd remind you that during the storm, it was a 12-foot surge with 20-foot waves.
Wow.
See, that surge raises the water 12 foot. But a 10-foot wave, and here's where it gets really crazy. People don't know this, but a 10-foot wave is actually 20 foot in height from the bottom to the top. Mm. And so some of those waves were 30 foot high as they hit, right? Which is why I have pictures of boats landing on cars a mile inshore. I actually had a client whose boat floated a mile inshore and landed on some poor guy's Escalade. And his boat came right out of his backyard over top of his home, which was completely destroyed. Wow. And again, so yeah, when we talk, when you go back to, we had chatted on the tidal surge earlier, surge lines, a 12-foot surge says where the water's going to be. The wave height is in addition to that. So even if you say, oh my God, how's it ever going to come 20 foot? We get 20-foot waves during hurricanes on top of the higher water. So it's a scary proposition.
It is, and I was just saying, it's just something that, again, as a real estate agent, we need to be knowledgeable about that. And as you just said, I wanted to emphasize, it's about your risk aversion. What are you willing to tolerate? Because different people, especially if they're coming from the Northeast or if they're coming from Kansas, as you mentioned before, what is it? Because it's a very different environment in Florida. And so we want to make sure that as real estate agents, we are educating our clients so they can make good decisions in real estate. So we're already out of time. I can't believe it goes so fast, but I want to make sure that people know how to get a hold of you, and website, phone number, anything you want to share.
Sure. So again, I'm the owner of Florida Coastal Insurance Agency, and our website is pretty rudimentary, www.floridacoastalinsuranceenagency.com. You can find us on Facebook as well. We're out there. Our phone number for the agency here is 727-569-6000. Once you call in, there'll be a prompt system. If somebody ever needed me directly, they could get me at 101, but my team is frankly better and smarter than I am. So if you ever need help with a client. But with that, that's the best way to get a hold of us.
Well, that's perfect. And you also are happy to talk to anybody or anyone on your team, to anyone who wants to, a real estate agent who just wants to get some information and some quotes, right?
Oh, absolutely. First, I mean, obviously, you can see in the banner behind me, home insurance is actually, we the funny part is, if it wasn't alphabetical, we do more home than we do auto here in the agency. Home is the single largest thing that we write. We write it statewide here in Florida. We love to help people. And for me, what I actually really love to do is educate. So I love taking calls from not only home buyers, but from people in the real estate industry who just want to understand it.
Thank you. And I love that you do that. And the fact that you do continuing education and that you're so passionate about education, which I am as well, because that's how we all become better in our industry. And I love that the relationship is the other big one, is I think it's so important to create a relationship with people in our industry so that we can, again, help each other be better. So, I'm always looking for the silver lining and the yay in each day. So I'm going to ask you to lift your voice and say yay with me as we go off the air. Is that okay?
I will try. I'm not sure we're going to harmonize based on my voice, but let's do it.
That's okay. 3, 2, 1.
Yay!
That's perfect.